Hello, welcome back to another edition of iDig Day Trading. It is Tuesday, about 11:45 in the morning, July 28th. I'm going to go over four stocks that I looked at today, four that I found on my own using this very expensive software program that I've been using that crashed on me as I was trying to make a trade. So we'll go into that a little bit, but the four that I looked at was Kodak. This one right here, Eastman Kodak Company. I'll go through them real quick. Spectrum Pharmaceuticals, SPPI. And we also looked at this one right here, OCGN, OCGN, I think it's called. And we also looked at, this one right here, FRAN. This one right here, FRAN. So these are the four I found using my stock screener. FRAN and Kodak were low float stocks. Those of you who don't know what low float means, it means that basically there's not much supply in terms of shares that are available to trade. So when the volume is very high on something like one of these low float stocks, it has a tendency to drive the price up. Just a simple example of supply and demand. So this one, FRAN, it didn't have much news. It's a holding company. From what I understand, it was a sympathy play to Kodak, Eastman Kodak, which I'll get to in a moment. And what I'm trying to determine here is that I think when I'm looking at a low float stock in the pre-market, and pre-market is, where is pre-market in this thing? Oh, pre-market's all in here. See, as you can see, all the big moves were in pre-market for this particular play. At about 7 in the morning, it was trading at about, high fours, low fives, and it spiked up to $6, came back down to $5.40, and then it took off in pre-market. And then look what it did when the bell opened. It just went down. There was one dip opportunity at about a little after 10 o'clock in the morning. It's 766, and it made its way up to 892. And as you can see here, I remember at this moment it halted, and now it's just dying a slow death. So, I have traded in pre-market before. Lately I haven't, due to some advice I've been given to me to try to keep things simple. Often because in pre-market there's not a lot of volume. However, on this stock, there was a ton of it in pre-market. Right now it's trading it with 27.8 million shares being exchanged, and it was probably about half of that, which is still, that's a lot of volume. Double-digit millions in the pre-market. And maybe the lesson here is to maybe try to do a trade pre-market when the liquidity is that crazy. So FRAN was one. The other one was Kodak. And with Kodak, everyone knows Eastman Kodak, and it's probably not been doing very well because just the digital era has probably been beating it up. As you can see, this is a 1-year chart. Its high around New Year's Eve actually was about $4.78, and then it was just been downtrending, and then it had a little down to the $2 range, and then it went up a little bit, but almost to $3. And then look at this. It did this crazy thing. See this red candle right here? I mean, we're talking, it was trading at low twos, and it traded as high as almost $12. That's pretty wild. That's pretty crazy. Why did this happen? Well, they had a news article basically that the government is going to provide them with millions of dollars to start doing drug production. What that drug production is, I don't really know. I mean, it's pretty crazy. Right here, Kodak shares nearly triple on news of government assistance for drug production. It probably has to do something with COVID. Eastman Kodak soars as Trump administration provides $765 million loan. See, that's an interesting thing. It's a loan, right? To make generic drugs. This is probably their way of trying to We have an election coming up, and I think they're trying to steal some of the thunder of the Democrats to make prescription drugs cheaper. And why not get Kodak to make the drugs? They make film, let's have them make drugs. So that's a whole other conversation. The point of this is that the stock went crazy. Now, it's only a loan, yet people went crazy for it. And as you can see, here's pre-market. So in pre-market, this was just like Fran. It was going up. You know, it opened up the pre-market at like almost 6, and it got as high, as 9, from $6 to $9. And then at the open, there was a dip. All right at the open here at like 9.40, it got down to about $9.12, and then it came up to 11. It topped up at almost 12, and now it's kind of, it's flattening down around here. Still very high from its previous low of yesterday. I feel like I'm a weather forecast guy talking about this, but once again, I think this was another low float stock, like Fran, and with a news like, hey, the government's giving them a loan, but it's a big loan, and it created a lot of excitement. And I think maybe the thing I should have done here is maybe take a chance and buy pre-market when there's a lot of volume. I mean, there's 162 million shares right now being exchanged, and I remember when I was looking at this in pre-market, it wasn't as high as that, but pretty damn high. So that's something to take a note of about low float stocks. The other two are not low float. OCGN. This one I screwed up on. Right, I was watching it in pre-market. Where is the pre-market on this? That's yesterday. So yeah, here's pre-market. So it didn't do a lot, but it had really good news. They had this great news from the FDA, granting them some sort of designation to continue their treatment. I think it's for certain eye problems. Not very sexy, but on the other hand, if you're a biotech company and you're getting FDA green lights for certain things, to go to certain elevated levels of your testing, it excites people who are following these stocks and who are following that sector. And it's interesting because it didn't really do much in pre-market. Like at about 9 in the morning, it was down about 67 cents, and then about 18 minutes later, it jumped up to 78, and then right at the market open, this was when I decided to watch right at the market open because I thought this was their second green day. And when I say second green day, I'm talking about this on a 10-day chart. Oh, I'm so sorry. Here we go. Does this help me? No, it doesn't help you or me. Let's go to 1-month chart. Okay, so I call this a second day. You could call it a third day, but I'm calling it a second day. It was at 29 cents, more or less, about 30 cents a few days ago. And then the next day it jumped up to 40 cents on the high. And then yesterday it got as high as 75 cents. And now it got even higher, at 95 cents. And so when I see this, in terms of some of the studying I've done, is that when you see this kind of trend, that sometimes these things get overextended and then they're going to drop down. So I was anticipating that drop, and it happened. It didn't happen as dramatic as I wanted it to, but let me see if I can zoom this out a little bit, or zoom in a bit, I should say. So this is a 1-day chart with 1-minute candles, and it opened at 9:30 at 75 cents, and it went up to 83 cents. And then it did this, and it went up even more to even 94 cents. And this is when I was watching it. This red candle, I watched this red candle go from 92 cents in a blink, almost in a blink of an eye, down to 81. And I was ready to hit that buy button. I had set a limit at 79 cents in anticipation of this drop. And I was a fool and thinking it could get there. Well, I shouldn't say I was a fool, but what I should have done, and because I could sense it, my instincts were telling me, take the 81 cents. Take the 81 cents. I did not take the 81 cents. And I watched it climb up to 95 cents. I could have done, what is that? What is that? Oh man, I do not have a calculator right in front of me, but I said I do. So say I got it in 81 and I sold it like 94. Let's just say 13 cents divided by 81. That would have been like a 16% gain. A 16% gain for a newbie like me is hard to come by these days. I'm happy if I can get somewhere between 5 and 10%. I'm like ecstatic. So I was a little disappointed in myself of not pulling the trigger. And as you can see, it's been kind of downtrending-ish, but now it's stabilized at 81 cents, which is what I wanted to buy it at in the first place, but whatever. I'm going to watch this at the end of the day. Point is that I did a revenge trade, which is something you should never do. I was disappointed in this, and then I decided to go, okay, that's over. I'm not going to chase it. So I went over to this one, SPPI, which is Spectrum Pharmaceuticals. And this is one that I was interested in when I was looking at it in the pre-market because they just did a press release talking about positive lung cancer drug results, which can be fluff, I'll admit. It's a in-house company press release trying to get people interested in their stock, but it seemed to be working. So as you can see, this was yesterday. It went from $3.22 at the end of the day, and they did this release. I shit you not. They did this release right at the close at 4 o'clock in the afternoon yesterday, and look what it did in extended hours. It literally like 3 minutes later, it went from whatever I said here, $3.25 more or less to $6.20. I mean, it doubled. It pretty much $6.30. It pretty much doubled. And then it did all this wonderful stuff through extended hours and pre-market. And so I decided to do something with this one. I thought this one's going to crash. And it kind of did. And I went in for a bounce on this one. And what did I do? I entered in a trade at, where is my wonderful notes? Okay, I entered in a trade at, here we go, at 9:43 in the morning. So somewhere in here, at 9:43, I entered at $4.27. This is where I thought the low was of the dip. And because my expensive software program was crashing on me, I could not watch level 2. It was kind of bumming me out. So I just decided to do it anyway. So I bought in here, and I tried to be patient, and 15 minutes later at 10:01, it struggled up to, I almost sold it at $4.30 because I was thinking, I was hoping to hit the VWAP. That's what my goal was. I was saying, okay, it dips, and then if it hits the VWAP, I'll either sell it or maybe I'll hold it and see if it goes further. So it struggled, didn't even get past the $4.30, just about actually. And then blah, 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 blah. At 10:01, it was down here at $4.16. I cashed out at $4.15 and got a negative 3%. So if I had done and followed my instincts on OCGN, I would have been up about 15, 16% instead of being down negative 3%. Am I angry? Actually, I'm not. I am going to write an email to the people over at Stocks to Trade, who I use their expensive software program, to be like, what happens as soon as the market opens, things light up, like a casino in Las Vegas, and all the numbers start flying around, and I think it overwhelms their software, especially if I have other windows open and blah, blah, blah. But you don't need to know all that. This is something I have to work out with them. And I'm not angry, upset, or anything, or I have any FOMO because I only lost 3% on one of the trades. And I learned some things about low float stocks and watching how they behave in pre-market, which means I'll just look at that again. And OCGN, I missed it, but you know what? I was on the right track with it, and I could have done something with it. I could have been a contender. It doesn't matter. Tomorrow will be another day. You got to stay in the game, and can you dig it? All right, I'll see you on the next video. Take care.